Hello. Hi, Barbara. We're not going to get Jim Browdy on tape talking about this, are we? What a shame. I'm Barbara Anderson, Executive Director of Citizens for Limited Taxation, and I'm here to talk about tax breaks for deserving low-income people, for people with children, for people who are paying their water and sewer bills, and for the type of constituent that shows up often in the House Chairman's district, Mr. Chairman. The Citizens for Limited Taxation, of course, is opposed to the graduated income tax initiative petition for a constitutional amendment. And therefore, that puts us in the position of having to take a position on the statute that is attached to that constitutional amendment, or will be if it gets to the ballot this November. That statute contains many tax cuts, the tax cuts that we have been fighting for, advocating, lobbying for since as long as you have known us. The same ones that the organization that is proposing the graduated income tax has opposed at the same time we've been proposing them. We now wish to express our support for that statute, for the language in the statute, except, of course, for the part that requires a graduated rate structure and the capital gains piece, which, of course, is badly drafted and is not what the state needs in capital gains tax reform. But the tax cuts for the low-income people, for the working mothers, for the dependents, for the increase in no-tax status, and certainly for the water and sewer taxpayers. We do support that. We have filed legislation as similar to it as we've been able to file through Representative Tarr and Representative Kuhn. The bill is somewhat different. There are people who equate complexity with good tax policy, so we have, I have to admit, had a hard time emulating or trying to emulate the bill that was filed by TEAM to do tax policy, but we've come as close to it as possible. When the time comes that their bill is before you as an initiative petition, we simply support that language, except, of course, for the graduated rate structure and the capital gains piece. Meanwhile, any bill that is filed to do the same thing the team wants to do, to give rate relief to, or to give credits to people with water and sewer bills, to increase the personal exemption from $1,000 to $2,000, whatever you think appropriate, to increase the no-tax status from 10 to 12 and 12 to 14 for single and double filers. We support all of these things. We have always supported them. We would point out, however, given this opportunity, that we supported cutting the double tax on so-called unearned income, another part of their initiative petition, back in 1985 when this legislature overwhelmingly passed legislation to do that and to increase the personal exemption. This was legislation initiated in the House and supported by Senator Chester Atkins at the time, and it passed overwhelmingly, and members of TEAM, of course TEAM didn't exist then, but people who are now their members, lobbied Governor Dukakis to veto it, which he did. However, we still support cutting that double tax on unearned income for senior citizens. We would support cutting it for everybody. What we've done is divide our bills into two parts. One is our pro-economy part, which would cut the double tax on so-called unearned income down to the same 5.95% as the tax on earned income. And we feel that that would be roughly a $200 million alleged loss in static analysis, but would stimulate the economy and get the economy moving and do for the state what your estate tax cut did, Mr. Chairman, to keep senior citizens with wealth in the state paying taxes here. And, of course, when they die here, we get our share of their estate. So we support that on a pro-economy argument. The other three, I'm going to try something a little different here, Mr. Chairman, that it's finally occurred to me after many years that there are some arguments you cannot use with some members of the committee, yourself, of course, accepted. You cannot talk about the taxpayers earned this in the first place, and when you have a $16.1 billion budget, letting the taxpayers keep some of their own money is certainly a worthwhile thing to do. That simply doesn't work with some people, Mr. Chairman, so I'm going to try something else that I know is dear to the hearts of many members of the committee. I'm going to talk about tax expenditures. And I would like you to try, just for a change, to think of these tax cuts for working people. For working people, I'm going to try. You're doing very well, Mr. Chairman. You've got the proper attitude, yes. Think of them as tax expenditures. Think of them in a $16.1 billion budget as your decision as members of the legislature to do something not only for the constituencies who are at other committee hearings and Ways and Means on other parts of state spending, but for the constituency that depends upon this taxation committee. And think of the people who are working for a living, working class taxpayers who are out there paying taxes so that the state can then come in with services that they have to provide to these people because they can't afford the services because you're taking the money from them in the first place. This is why, and this is an important point to make on the graduated income tax issue in general, we're not opposed to the effective graduating of the rate. We already have an effective graduated rate in Massachusetts because the personal exemptions are the same for everybody. And the no tax status, of course, pushes our income tax to be very progressive in a way that some people don't realize, simply because the rate seems to be the same, but it's not. Effectively, it's different because of the no tax status and the personal exemptions. So we have no problem with the idea of increasing the no tax status and increasing the personal exemptions, the concept being that people get to keep a certain amount of their money before they're taxed, enough to live on. That just seems sensible to us. When you do this, you do effectively graduate the tax rate. And we've done that in Massachusetts, and I have no objection to doing it more if you're doing it for that reason. If you're doing it to penalize the job creators, to attack the rich, to get points off of attacking the rich, then we don't support that. But if it happens, incidentally, to allowing people to keep a certain amount of their money before they're taxed, and we're all for it, and that's why we have always supported increases in the personal exemption, increases in the no tax status, and tax credits for people who have a lower income, because it works out to be fair and just and equitable, but it isn't an assault on the wealthy. However, we do not support increasing taxes on anybody in order to pay for this. We figure that what we're talking about here with our tax expenditures is roughly 1.2, 1.4% of the state budget. If you throw in the pro-economy cut in the unearned income, so-called, then you've got roughly 2.5% of the state budget. That doesn't seem unreasonable to us. So we would support doing all of these things for the benefit of those people, of course, who not only depend upon the state for tax breaks, but also depend upon the job creators for the jobs that create the taxes in the first place. However, this doesn't mean we aren't in favor of some other bills that are before the committee today. If you want to look at those instead, there's a bill from the Department of Mental Retardation, a tax credit for individuals caring for persons with mental retardation. We think that would be certainly worthwhile doing, and we would be willing to do that without waiting for a graduated income tax. We feel that the petition for a personal income tax credit for the purchase of long-term health care insurance policies would be worth doing, and we wouldn't require everybody to wait for the graduated income tax to do it. We would support that if you prefer that type. Mr. Tobin of Quincy has a bill for an income tax deduction for everybody's sewer fees, not just the poor element. We certainly support that. Whatever you feel is best to give relief to the people who earn it, but we would not support a graduated income tax, because what a lot of people aren't aware of is not only does the grad tax attack the job creators and the entrepreneurs and the people who invest in Massachusetts, it also, because it allows local income taxes and water and sewer district income taxes and county income taxes, assaults the middle class. And so if you're going to give these tax breaks on the backs of the middle class and the job creators, then in the long run, those lower income people are going to be hurt when their jobs disappear or are not created. So we do not support the graduated income tax. We do not support tax increases on the middle class or the job creators, but we certainly do support relief as soon as possible for low-income taxpayers, for water and sewer rate payers, and we support them now rather than waiting for a team to have the chance to trick them into voting for a tax cut that in the long run will hurt everybody. Thank you very much.
Mr. Chairman, thank you for the opportunity to testify here today. My name is Laura Barrett. I'm the Policy Director for the Tax Equity Alliance for Massachusetts. There's an old adage that imitation is the highest form of flattery, so I suppose we should be flattered that CLT has seen fit to lift so much of our graduated income tax proposal and throw it into these bills, but we're not. To support half of what the graduated income tax does, but not the second half, is a little bit like trying to float down the river in half of a boat. The graduated income tax proposal, as drafted, is a balanced, fair, and fiscally responsible measure, which I know we will have greater opportunity to talk about on the day that the initiative is heard before this committee. I do have to say a few words about it in order to describe the contrast with the bills that are before you today. What the graduated income tax bill will do, in brief, is cut taxes by $600 million for 92% of the population. All married couples who make less than $100,000 and all individuals who make less than $60,000. It will do this by cutting the tax rate as well as by enacting some of the exemptions and credits that are in the proposals before you today, including doubling the dependent exemption, creating a new child care credit, increasing the no tax status thresholds, and enacting a circuit breaker provision to give people, particularly seniors on a fixed income, some relief for high water and sewer bills as well as property taxes. The big difference, there's two key differences though, between our proposal and the CLT proposals. Ours not only does this tax relief, but it pays for it, and it says how it will pay for it right in the bill. It does not leave the decision for ways and means to grapple with, as a legislator said here earlier, but instead says in black and white that we will ask the wealthiest 8% of the population to start paying at a higher rate, as they do in 35 of the 42 states that have an income tax, as they do at the federal level, as they do in every industrialized major nation in the world. A large justification for that, of course, is because wealthier residents in this state actually pay less of their income to all state and local taxes combined, including the sales and property tax, than do low and middle income people. And we think it's time that people whose incomes are below the thresholds I named start getting tax relief. What Barbara Anderson's proposal would do, on the other hand, is cut taxes, and my estimates have it up to $430 million, not only providing relief to children and families with children and people with high water and sewer bills such as we do, but the biggest ticket item in her proposal is the second biggest difference with ours. That is by cutting the 12% rate on unearned income, but having no consideration taken for people at higher income levels paying at a higher rate overall, as the grad tax does. This would be a tremendous boon to wealthier people in the state who right now pay a large share of that unearned income tax. Another thing this proposal would do is it doesn't, as I don't see anywhere in here, where it eliminates the current 50% deduction for long-term capital gains. So that means a wealthy investor would not only get the new 5.95% rate, but would only be paying that rate on half of their capital gains, bringing their effective rate to below 3%. So that means a truck driver, a school teacher, legislators, anyone here who pays on their earnings at 5.95% would be paying at twice the rate a wealthy investor would be paying on their capital gains. We treat capital gains quite differently in our proposal. What we do is we also eliminate the 12% rate. We say, yes, tax it at the rate of your earnings, the same rate as your earnings. But those rates will be adjusted depending on your income. And as I say, if you make less than $100,000, if you're one of those 92% of the population, you're going to be paying less than under the CLT proposal. You'll be paying at 5.5%. If you're one of the lucky people whose family income exceeds $100,000, a portion of your income may be taxed at a higher rate, at 8.8%, or if you're extremely wealthy, 9.8%, still less than the 12% rate that we're talking about. But we have another provision. We do have a special clause and a provision that CLT does not see fit to support when it comes to capital gains, and that is we provide significant tax relief for profits earned from investments in Massachusetts-based companies. It's the capital formation incentive. CLT's significant tax break for capital gains will encourage investments from Massachusetts. Our capital formation incentive will encourage investments in Massachusetts. And that is a critical difference between the two proposals. But by and large, probably the biggest difference that a fiscally responsible committee should be looking at is how are these bills funded. You've got before you $430 million in tax cuts paid for by I don't know what. New printing presses to print dollars. We can't do that in Massachusetts. And I'd like to know specifically where those cuts should come, because I have a feeling they would probably come from the services for that now benefit the very people that these tax cuts purport to help. You're going to take with one hand and give with the other, and I don't think low-income people were really going to find themselves better off in the Commonwealth of Massachusetts if this were passed. Ours, on the other hand, would actually benefit those folks, benefit all of us, most people in this room, now that most of the bankers have left, by giving us significant tax relief, $600 million worth of it, but it would pay for it in a fiscally responsible fashion, and we hope you will support our proposal instead of these 7 bills before you today.
Any questions? Ms. Anderson or Ms. Packer?
Just one point I'd like to clarify, and I appreciate both the spokesmen offering
The spokesman is perfectly all right with me, but she's a Liberal representative, so you should be very careful. Yes.
I want to be politically
Spokeshuman being, how about?
Affectionately spokes.
We have a good discussion, which I'm looking forward to on this whole initiative. And it's something that I've done a great deal of homework on, but we've still not come to a final decision, but that is I guess my question would be just on one point, and I read the material, but on one point, Barbara, you mentioned the local income taxes would be allowed under this initiative. And I want you to elaborate for 30 seconds, and then allow Laura to elaborate for 30 seconds, a little bit on that aspect of it.
Yes, right now, the Constitution does not allow local option income taxes or county, nobody can do an income tax for the simple reason that there is a uniformity clause in the Constitution that says that all of us have to pay at the same tax rate. So if your community did a 1% income tax rate and mine didn't, you'd be paying more than I. The team language simply removes that phrase, that all taxpayers will pay at the same uniform rate across the Commonwealth. With that phrase gone, there's nothing to prevent the legislature from allowing local income taxes. You could be paying a Boston City income tax if you worked here, a local income tax in Canton as you lived there, a county income tax, a water and sewer district income tax, a school district income tax, if that community chose to do so. So we could be paying, as long as within each community, the higher income people were paying more than the lower income people, if there were a graduated structure, as long as that was still intact, because that is the language in the petition, then you could pay more than I could pay more than you, even if your income was different than mine. And that's why it would be allowed for the first time in the history of the Commonwealth, and that, of course, is the tax that would hurt the middle class.
Okay, so just for translation, the uniform...
It isn't that simple, or I'd make it simpler. Yes.
Translation is a protection factor, what it says.
It's gone. That's right, it's removed.
The legal scholars who have analyzed this for us say that it's flat out wrong. Barbara Anderson said a minute ago, and I just wrote it down, that our initiative, our constitutional amendment, simply removes the uniformity clause. It doesn't simply remove the uniformity clause. It replaces the uniformity clause with a requirement that rates be graduated. And how that's defined is a requirement that people of higher income pay at a higher rate. If they're in a higher income bracket, they pay at a higher rate than people in a lower income bracket. With that requirement in place, a local option tax would be impossible. And I'll give you a for example, because it's a little bit complex. Imagine that the city of Boston decided to have a local option income tax, and the legislature went crazy one day and decided to actually allow them to do it, because they'd still have to allow them to do it, and I sincerely doubt the legislature would. But let's just say, play out the fairy tale hypothetically, the legislature decided to do this. Well, in Boston, you're going to have Jane Smith, who makes $50,000, but she's got this 1% surcharge. So instead of paying at the 5.5% rate, she's paying at 6.5%. Well, in Wellesley, they decide not to have a local option income tax. John Doe makes only $40,000. He doesn't have a surcharge. I'm sorry, John Doe makes $60,000. I got to reverse. John Doe, he doesn't have a surcharge. He makes more money than Jane Smith, or whatever name I just gave her, but he's going to be paying at the lower rate, 5.5%. That violates the requirement that people of a higher income pay at a higher rate than people of a lower income. And legal scholars who have looked at this have said it's just as sure a bar to local option income taxes as is the uniformity requirement. It just does it in a different way.
Except that our legal scholars have looked at it as well and say that it is not. So what you'd end up doing is imagining yourself sitting on the Supreme Court in Massachusetts making that determination when it is too late, of course, to do anything about it, because the initial petition will have passed and the permission will be there. The uniformity clause has kept the legislature from doing local option taxes since back in the 1920s, I think the first time you asked. Our legal scholars tell us that that was the only language preventing it, that tax policy will always be done parcel specifically by community to community, so that as long as in your community people who earn more than you do are paying at a higher rate than you are within your town, that it doesn't make any difference if they're paying a lower rate than some wealthier or higher rate than some wealthier person in another community. And that would have to be determined by the Supreme Court. And our position is that language has worked very, very well for the last 200 years in this state, and there's no reason to replace it.
Let me just follow up on a point you made, Mr. Chair. Just one to represent, thank you. You said that the legislature would have to approve this.
Correct.
But actually, if the legislature approves the placement of this question on the ballot, and it's approved by the voters of Massachusetts,
No, what
that,
I'm...
in fact, is giving legislative approval.
No, what, even if...
No, I know that-
No, let me just say, even if Barbara Anderson were correct in her legal interpretation that local option taxes would somehow be permissible, All that would be permissible is that the Great and General Court of Massachusetts could approve local option taxes, not that every city and town could then go do it. And even Barbara Anderson would agree with that. It doesn't carte blanche, and in no state would that ever be allowed that Brockton or their local cities could approve it. So it would still be up to the legislature. So that would be a whole other bill to be filed and drafted and fought for that we don't know anyone is going to draft and fight for. We know of no legislator that's proposed it, and we certainly are not proposing it. We don't know where it's coming from. It's a hypothetical, theoretical fear that you could raise on any issue, but it is a red herring.
Thank you very much.
Representative Brockton. I'm not a legal scholar. I'm a little Chairman Scott thing. But my parents, I come from a middle class family. They make about $110,000 combined. They pay more than someone who makes $40,000 because 5.95, we pay more if we make more.
Right.
You don't have to be tax high.
That's
You
right.
pay more if you make more. So all of this mumbo jumbo, and I don't mean to make any offense to the liberals at all. I'm a Democrat, I come from a working family, but you make more, you pay more. Very simple concept. Every time I hear about you make more, you should pay at a higher rate. Why? If you make more, you pay more. That's the bottom line. That's how it works, and that's how it should be. If I go out and I'm a lawyer and I have a side business, and I make more than someone who chooses just to take the $30,000 here, why should I pay more? I mean, the higher rate, I pay more. It took half my income this year. I don't understand it, and I think you try to make it too complex so that you can raise more revenue to waste here and there. I think once we, there's some things that are going on in the next year, once we reform the welfare system in the state, you'll have plenty of money to be saved. You can do whatever you want. But I think that, this concept of the rich should pay more, or the middle class should pay more, because the middle class are the ones that are going to end up paying more in the long run. It's not going to be the poor, it's not going to be the rich. It's going to be the middle class that are paying more, and it's going to continue to happen every year. That's all I have to say. I don't want to get into discussions. We will in another month or so when the bill comes out. I just get irritated hearing that because the people who make more do pay more.
Do you want a response or no?
No. We'll get into it. There we go.
Laura, let me just make a point. When you turned around and said the bank is left, and I can see in your eyes, you look at the fat cats. Those are the job creators. Those are the people you need in the programs that you want to do. Don't forget that.
I'd like to say that I think the job creators are actually in this room. The people who spend their dollars in Massachusetts stimulate the demand for the goods and services that the people you called so-called job creators provide. And I think that we create jobs by spending our money here and by being productive citizens just as much as a banker does.
Question I had was, when the governor came before this committee last year, he was looking for a tax cut of $200 million. These bills would add more to that, like 400. So you stating that in the $16.1 billion state budget, that budget is so efficient, so well done, that we couldn't find $100 or $400 million.
What I'm saying is that there are efficiencies that could be found, and I trust that all you in this room are probably looking hard day and night to find those efficiencies, and will be working for amendments to the budget to enact them. But I will also say that certain pledges haven't been kept in recent years. Pledges to fund local aid at a level that is adequate to fund local programs. That there's a promise before the legislature right now to increase funding to schools. I have 2 kids who are headed to being school age soon. I would like to see that promise kept so that my kids can be provided with a good education in Massachusetts. There's promises to be kept, and I think those promises would be very hard to be kept if you cut $400 million out of this budget.
Thank you both very much. Representative Brockton.
Yeah, Dr. Anderson, the water and sewer fee deductibility, is that off the property tax or the income tax?
Well, as I said earlier, we were trying to emulate the team bill, which means it's a lot more complicated than what we would have done, which we would have simply taken it off the income tax. It's off the income tax, but you have to be paying a certain proportion of your income. Well, it's very complicated.
But the bottom line is
Some people, for those people who are paying their water and sewer, for those people who are paying their water and sewer rates through their property taxes, it's done one way. For those who are paying it separately, as we do in my community, it's done another way.
Laura Barrett,
We wouldn't have done it that way, but that's the way they did it, so it's fine with us.
Specific, we have a bill, previous bill was to be bank, relief to banks, and especially, the chairman brought out this Bank of Boston, just announced yesterday that the person that heads that made $1.7
Million.
$7 million in 1993. How much what would the team propose on the regular tax? That poor guy's.
He'd pay a lot more.
I mean, the bank needs a tax relief now. How much?
I feel very sorry for the fellow because he actually would be paying at a higher rate, at the whopping high rate of 9.8% on his earnings. Lucky that he is, though, he'd be reducing the tax he pays for his dividends and short-term capital gains from 12% to 9.8%. So he wouldn't be so bad off as he might think. But he would be paying more.
Chairman Scott.
Barbara, if everyone were as honest as you, I'd have no problem with these bills. And you're not going to say they're tax neutral, you're going to say they do cost money.
Static analysis wise, that's what you always need to know, so that's what I did. Right.
See, my problem is I have to deal with people who aren't totally straightforward. I have to deal with Wild Willie, that liberal libertarian and his band of merry men behind with Bruce and Gary and Mike and Ed. I have to deal with the guy who comes in here and says that this government is a walrus. And he's turned it into the biggest mammal this world has ever seen. $14 billion budget, $15 billion budget, $16 billion budget. This is the guy who was going to come in to state government and lower state government. He has spent more wildly than Dukakis would have ever dreamed about spending. The liberal libertarian who spends and wants to give all the tax breaks back, that creates chaos. He doesn't care. He's going to move on pretty soon. You know, that's what I have to deal with. And that poor Tom Finner, that kid from Dorchester, who is truly on your side. I mean, he'd freeze his mother in the cold. Tom is the true conservative. But how you can be in the same boat with phony baloney, who has gone from 14, 15, 16, and when he finishes doing subs this year, it'll be close to 17. How can he advocate social spending the way he does, and then the reduction of taxes the way he does?
May I answer that, Mr. Chairman? I would be delighted to. I know that nothing gets me in more trouble with, you'd be surprised who, than defending Governor Weld, but I'm going to do that. I'm going to point out that this legislature was increasing spending under the Dukakis regime all those years, and certainly, Mr. Chairman, you were not doing anything to stop that. And then Bill Weld ran on a promise of cutting state government if, in fact, he had the tool of Question 3 to do it. You opposed Question 3, so did Laura Barrett. Governor Weld did not get the tool he asked for. The fact is, Representative, Mr. Chairman, and I happen to know this from having worked up here for 13 years, that if we don't get the money away from you in the beginning, you will spend it. And I doubt very much that you, being an honest person yourself, and I mean that without any sarcasm at all, will agree with that. If it's here, you are going to spend it. You always have. You always will. Therefore, since the money was not cut under Question 3, and you were getting all this income tax revenue, and you're getting revenue, and every time the governor has filed a tax cut, it has, not every time, many times you have accepted some of the tax cuts, and certainly Senator Keating has supported and pushed forward some of those tax cuts, but he has not gotten all the tax cuts he'd asked for. So therefore, you have the money from those tax cuts to spend, and you will spend it. The governor at that point has a choice. He can come in with a budget that cuts spending, knowing that you will have the money to spend, and you will add the money as the year goes on for the things that you prefer to spend it on. Or he can choose his priorities and set it knowing that the money is going to be spent anyhow. And I don't really blame him for doing what he has to do.
Why doesn't he give it a try? Why didn't he give it a try one time in his 4 years of reducing the budget?
Mr. Chairman, that is not fair. The first year he did reduce the budget, which had never been done before.
Barbara, he did not. The House cut the budget $500 million.
He did not.
Well, isn't
He
it-
brought in Dukakis's budget. It was the House that cut the budget. And Barbara, you're right. You give me money, I'll spend it. I'll spend it. I'll spend it. Okay, that's where I come from. But he doesn't come from that. He comes from, it's walruses up there, they're nothing but walruses.
Mr. Chairman, he hasn't used the phrase walrus in 4 years. However, I can't help but have noticed that this legislature didn't bother cutting taxes or spending until Governor Wells stood up and said, no new taxes. And once everyone up here understood that he meant it and he would shut the government down if he had to, then and only then did you cut taxes and start to control spending. So if anyone is responsible in this state, it's the person who suddenly showed up and spending got cut for 1 year, then the people who were here for the 8 years, and that's not all of you, I remember, and didn't do anything except sit by while Governor Dukakis increased not only spending, but taxes at $1 billion a year, which has not happened under Governor Weld, nor has Proposition 2.5 been devastated, even though the very conservative Ways and Means Chairman has tried his very best to do that. And only because of Governor Weld do we not have a bond rating that's somewhere down lower than we can even see from our lofty height up here as the Taxation Committee Chairman. And therefore, the phony baloney that I would ascribe to anyone in this building most certainly would not be directed at Governor Bill Weld. But you asked, Mr. Chairman. I didn't start that, Mr. Senate Chairman.
He's a difficult guy to help out because there's just no principle there.
Mr. Chairman, that's slanderous. That is simply wrong. I'm not going to debate you on that.
Spends, and he wants to give everything.
And you'd spend even more, wouldn't you, Mr.
Of course
Chairman?
I would.
Of course you
I
would.
do that.
That's right.
Yeah, but
So-
I'm honest about it. I didn't come here and say I didn't want to spend money on my people. He did. He did. And he's not fulfilling that pledge.
Well, if you give him his tax cuts, we'll see how well he can fulfill his pledge, but you seem to be blocking them, Mr.
Which
Chairman.
ones? He's gotten everything in 3 years that I can think of.
The same ones that we have just filed that I'm here testifying on, he's
I mean,
filed.
all the way down the list. There's state tax, and I go, I'll give you 5 or 6 that he's eliminated. Every single thing he's wanted, he has got. He didn't get the last one last year, but it's coming pretty quick this year.
Well, we're certainly looking forward to that,
It's
Mr.
coming
Chairman.
pretty quick this year, but
Well, then,
he
God
just-
bless him, Mr. Chairman.
God bless him.
That's right, he's going to get another
I
tax cut.
just
That will be
told you we're
6.
spending too much money in the Commonwealth of Massachusetts.
Mr. Chairman, we are not running a deficit. We are not printing money.
Also,
Apparently,
That's the analysis. If you're not running a deficit, you can spend as much as you want, huh?
you are going to spend it because you have it. He can either spend it on his priorities, or he will turn it over to you and you'll spend it on your priorities, which the last time I looked was allowing fertility drugs for welfare mothers, until the representative found this was happening and brought it to everyone's attention and put a stop to it.
He runs the government, not us.
I will not take a seat and choose to remain standing. I am here, Mr. Chairman, in support of the package of bills encompassing 4438, moving on to 4437, 4436, 4440, 4435, and 4439, which were the topic of the previous very enlightening and certainly entertaining discussion, Mr. Chairman, with folks from Citizens for Limited Taxation. Quite simply, I think that this package of bills taken together does 2 things. Number one, it provides some real relief and some tax dollars in the pockets of the people who are struggling to meet their financial commitments in this Commonwealth. And number two, it provides an incentive and, in fact, a reward for those who may be willing to invest in the economy of this Commonwealth, which may in turn create jobs, and in the long scheme of things, even help the people who are on the other end of the spectrum. But very simply, Mr. Chairman, I think that all of these bills taken together take us in a very positive direction for tax policy, trying to keep the dollars that are earned by the folks who are on the lower end of the scale in their pockets where they can be better spent than they can by us. And I think that at the upper end of the scale, it helps to attract folks, and it helps to make sure that they make their priority investing in our economy rather than investing elsewhere or not investing at all. So I would ask the committee for its favorable action on this package of bills, and I would pledge my continuing support to work with you, knowing that this is a complex arena and a complex array of issues to help sort that out.
Mr. Chairman, question. Representative, are you testifying as a representative or a state senate candidate?
I'm testifying in the best interest of the citizens of the Commonwealth, Representative.
Oh, that's great. Second question is, on these people that you said on the
the high end of the spectrum want to make sure they invest in Massachusetts. How can you make sure they invest in Massachusetts?
Well-
Most people right now are investing out of the United States.
That's right.
How can you make sure they invest?
Well, there's no way,
Massachusetts.
that's a great question, Representative, and if I may be allowed just a minute to answer, and I know that's an oft-asked question. I think what we can make sure is that if we continue to maintain high rates of taxation and disincentives, we can be sure they won't invest here. We can start to do the right things to try to induce them back into this economy and into this marketplace and into this Commonwealth. And for sure, if we don't do that, that potential will forever be excluded. So there is no guarantee. And in fact, economists and social architects, I think down through the ages, have tried to find ways to guarantee that that investment will be had. But for various constitutional and regulatory reasons, I don't think we can ever guarantee it. The most we can do is increase the odds and increase the probabilities that we will see those kind of positive investments.
Thank you, Representative.
Thank you, Mr. Chairman.
Shortly going back to the ag tax issue. Representative T, quickly, out of turn.
Thank you, Mr. Chairman.
Legislative duties.
And I continue